Joining us right now, Ashley Webster, Liz MacDonald, Shah, Gilani, Dr. Barton. We've got to start with politics, guys, because the turmoil in North Korea, also healthcare. I mean, the good news is the market seems to be shrugging it off. Shah, what do you say?
The market has shrugged off everything, whether it's geopolitical, whether it's domestic politics. Everything is just being shrugged off. Even slow growth is being shrugged off. And we're looking at the leadership, and there are the growth areas in terms of the technology stocks. Now the banks are taking the forefront. So the market's going through a nice little rotation here, and it's proving to everyone that it wants to go higher. So it's all good and clear skies ahead so far.
Shah, you look really good there, my man. I'm looking for you to break out one of those Sherlock Holmes type pipes because you're looking suave this morning, my man. Dr., what do you make of that?
Thank you, Charles.
Yeah, you know, Shah was right on point. And the one thing that I would add, he said tech stocks. You know, we've survived the tech stock pullback of 10% in some of these big five names, and the rest of the market has buoyed us up. We just don't make tops when so many stocks are participating, when we have such broad participation. Even when the leaders fall down a little bit, everybody picks them up. This market may have a little dip in it, but I think we've got more upside.
So you consider something of a buy signal that the rotation out of tech, that money didn't go to the sideline and found some other undervalued names to go in.
Financials. Exactly. Financials and also small caps have been picking
We've been through this. It's not geopolitics. It's going to be interest rate hikes, corporate earnings going down, or recession. So the Fed, surprisingly, still talking about rate hikes, even though inflation is non-existent, given the Amazon effects, putting in deflation and lowering prices across the board.
Let me ask you about that, Shah, because there's an article in the Journal this morning about the Fed maybe starting to get rid of let its balance sheet run off. You know, they haven't been precise in when they're going to have that happen, but they have hinted that it's going to happen, and it's rattled the market periodically.
Well, it's going to continue to rattle the market, and there's nothing really that is going to affect the market longer term. This is normalization in the works. I mean, this is what the Fed should have started to do some time ago. So reducing a $4.5 trillion balance sheet is rather overwhelming, and the markets are looking at that and saying, how are they going to digest that? How's the bond market going to digest that? And it's so far so good in terms of their uptake in rates. Hasn't affected anything. The rate hikes have been a non-event, and I think rates could get, in terms of the 10-year, we could probably get to 2 3/4, 3%. And as far as the balance sheet goes, you know, as long as it's going to be gentle, if they're not going to do anything harsh, the markets are going to digest it.
Real quick, Dr., on the same thing, but let's not forget it's not just the Fed. So if you do the Fed, ECB, and Bank of Japan, that's $13 trillion.
And that's a huge point, because we had the big down day in the markets last Thursday because of Draghi's statement that they might start doing the normalizing or the unwinding of the balance sheet that Shah talked about. The market has absorbed that and bounced back.
All right, guys, let's take a look at oil, okay, because gas is at $2.23 for the national average, a gallon, a regular, rather. That's a 12-year low. The debate, of course, Dr., is it good for the economy or bad for the economy? Because we are a major crude oil producer. We want to be a major exporter at some point. We brought in a 122% increase in rigs until Friday's rig count showed 2 lower, and that the market had a sigh of relief.
Yeah, I was just out out west in Utah talking to some wildcatters just 2 weeks ago, Charles, and I'll tell you what, I think to me the biggest story is that we keep getting it out of the ground faster while OPEC falls apart quickly, and both of those are going to keep prices down. I think it is a long-term positive for the economy.
But at what point, to Charles's point earlier, Dr., is the sweet point?
Yes.
Because at some point it becomes uneconomic. You just can't go dig. You're not making enough money to do it, and then jobs are on the line.
Yeah, so what is that break point? Is it 50? Is it 60?
It depends on the drilling area. If you look at what's happened really over the last year, it's been the Permian has been the wild, wild west. Right. Even on Friday, rig counts went up there. So they probably have the best, cheapest fracking oil out there, and that's why there's consolidation, there's buyouts.
But to Ashley's point, is it at $50? Hang on. Is it at $50 a barrel, or is it 65? I heard it's
on the downside is what we're worried about, because if
I'm talking about the breakpoint barrel of oil where it's not cost-effective to drill.
Right.
Under 40, I think, but we'll see. 40. Some experts say it can have a 3 handle and be profitable. Yeah, we'll see. All right, tech stocks, guys. Of course, we know they've been getting hit the last couple of weeks. Shah, we got a little bit of a rebound out the open. Is this the day that we start to see the overall bounce back in tech?
I'm not worried at all about the tech, actually we call it a pullback. Looked to me like program trading. It looked like the computers have kind of just decided they're going to take profits in here. And you know, you see that kind of action when normally investors don't just dump like that. That's computer trading. So the fact that it happened so quickly over a short period of time doesn't bother me at all. That was just some, you know, again, some profit taking, some program trading to take profits at these high levels. There's nothing wrong with that. All of them have stabilized. The tech stocks look great in here, and they're probably a buy down in here. I think any further dip in some of these big names, that makes them a buy.
All right. Of course, there's some viewers may be old enough to remember someone saying that back in April of 2000. Don't even worry about it, baby. Pick this dip up.
This time is different.
Shaw, I think I was one of the ones saying, don't even worry about it, baby. Pick some of those stocks up. What do you think, DR?
Yeah, no, I'm in that camp though because of the non-topping nature of the markets. I think we have a much bigger chance of a blow-off top here than we do of a rapid pullback. So I think there's another leg up for investors to get involved in and buy the techs on this pullback.
Yeah, all the things we talk about in tech are coming to fruition, and they're really starting to happen faster rather than longer.